Hey everybody, welcome back to the channel. Appreciate you being here. Let's get into it. Today, I want to talk about Netflix. Now Netflix has had an all-time high of about, it says here, 690. That's probably a little off, so about 700, okay? Now it's down to 315, and in the last year, the low was, let's see, it looks like 162. So, quite a wild ride here. The analysts here on finance, Yahoo Finance, say it's near fair value, okay? Their one-year target estimate is 354. Today it's 315. So, earnings per share, 9.61, PE ratio, 32. So let's see what they say. Let's see how the revenue and earnings are doing for the past few years. Oh, I like that. 19, 20, and 21. And 22, the revenue's going up, and the earnings are going up, 19, 20, 21, and then down a little bit in 22, which is understandable, considering the economy and what kind of shape it's in. So, okay, so what do we do, right? Is it a buy? Is it a hold? Is it a sell? What do we do? What do you do if you want Netflix, right? Well, let's go to statistics. One of my favorite things here on Yahoo Finance. Let's see what they say. So, profit margin, 14.21%. Operating margin, 17.82%. I want to jump down to, let's see, total cash, $6 billion. Total debt, $16 billion. Operating cash flow, $2 billion. Levered free cash flow, $16.5 billion. Okay, and there's no dividend. I don't like that. But otherwise, this is just a cursory look here. Yeah, looks good. I love it when a company has a positive operating cash flow and a positive levered free cash flow. That's a big deal. That's huge. And the debt isn't that bad considering it's a $1 billion company. Let's see what else we got. You know what? I don't need to go to financials. I've pretty seen everything I need to see there. Let's go to analysis. I want to see what the projected growth is, maybe for this year, next year, whatever they got going. Let's see, about 34 analysts. So the earnings, let's see. Okay, that looks good. And revenue, of course, looks good. Okay, here we go. Sales growth, that's what I'm looking for. Okay, so the current year, projected sales growth, 9.20%. That's really good. And next year, 11.9%. Okay, that's really good. Now, I don't like that it doesn't have a dividend, but even considering that, I definitely think it's a buy. I guess the question is it overvalued? I mean, do you want to pay $315? What do I think? I think it's decent. I think it's a decent buy. I wouldn't load the boat, but I'd probably, buy more than a little bit, you know what I mean? I'd make it, a little higher percentage in my portfolio than, let's say, 2 or 3%, maybe, maybe 5% or something like that. Maybe. Remember, I'm not a big fan of separate stocks, period, no matter what. But I do like to analyze them, check them out, and there's nothing wrong with owning a little bit. The big thing is I don't like that they don't have a dividend. So, other than that, I think it looks pretty good, and the analysts say it's, near fair value, which, that's always debatable, and there's different metrics that you can, decide if something is, fair value, overvalued, or undervalued. What do I think? It's probably close to fair value is what I'm guessing. But remember, it can drop a lot, it can go up a lot, anything can happen, so I think it probably is right now, at least close. So, yeah. I think Netflix is really good. And I haven't looked at Netflix in a long time either. And, I want you to remember something about when I talk about these stocks and everything. When you look for a stock to buy, you should be trying, and I know this is going to sound weird, but you should be trying not to buy the stock. You see, you should be picky, maybe even more picky than Warren Buffett. You need to be picky, right? Don't look for reasons to buy a stock. Look for reasons not to buy a stock. That way you only get the best of the best. Look, if there's one little thing you don't like about Netflix, like you think it's a little too high value right now, man, don't buy it. There's plenty of other stocks to look at and buy, So be picky. Be Warren Buffett times 10. Be picky. Say to yourself, okay, and if you have to have the stock, no matter what, you got that itch to scratch just by a tiny bit. But look for reasons, don't look for reasons to buy a stock. Listen to these words carefully. Look for reasons not to buy one. When you buy a stock, I want you to be overwhelmed, or an ETF, the same thing. I want you to be overwhelmed with how good it is. So good you can't say no, right? Like an Apple stock or something, unless it was way overvalued, okay? Otherwise, all things considering, yeah, that was short and sweet. That was really easy to do. I'm not surprised. It's Netflix. It's one of the FANG stocks. It's a big one. It's worth a lot of money. In fact, let's see before I close this out, I didn't tell you the market cap. The market cap is 140.582 billion. So 140.5 billion, 140 billion. That's a lot of money. So so there we have it. That's it. That's all I got for you today. In my opinion, Netflix is definitely a buy right now. Yes. So, am I going to buy it? No, I've got other stuff I like better, but I do like this. It's good. If it had a dividend, I would be more prone to buy it. But do I think it's good for most investors? If they're curious, what do I think? Yeah, I think it's good. So that's it. I'm going to wrap this up today. Thank you so much for being here. Have a wonderful weekend, and bless each and every one of you. Peace.